Hey guys, welcome back to my YouTube channel. My name is Bessie Manyori. If you're new here, obviously you might not know that this channel we're all about personal development, financial content, financial literacy, personal finance, and also I talk about things to do with being an international student. So if that's content that resonates with you, don't forget to subscribe, comment, share, hit the notification button so you don't miss another episode. I remember that I had promised you guys a video on capital gain shares because I shot a video on dividend shares, and if you haven't watched it, you can just check it. And I also have another one comparing the advantages between the two and how to choose them. So yeah, go check them out and then come here. We talk about capital gain stocks, and capital gain stocks are stocks that you buy low and sell high. Obviously it's a good strategy if you're an active trader because you are able to stay on your laptop and see if the prices are low, you buy; if the prices are high, you sell. But if you're a passive investor, which is someone who is not like all the time on the laptop trying to trade, you can buy dividend stocks. So today we are going to be looking at 4 capital gain shares in Kenya that you can buy. And today is 30th of March, so the prices might vary. And also you can find more information through your brokers, especially if you're in Kenya. So guys, take advantage of these opportunities and set yourself up for success by setting up your accounts so that even when the resources come, you will know what to do. So let's get right into it. The first share is Safaricom, and it's a telecommunication company, and its current share price is 17.9. So if you have 1,790, you can buy shares of Safaricom. And also it's a good company because it's a telecommunication company. I mean, people use this service daily, so they're definitely a good share. So some of the key positives include it has launched large-scale operations in Ethiopia. It has a strategy for network quality as compared to network providers. So it is a preference among many users, among many Kenyans, among many people, because its network quality is good and as compared to other telecommunication companies. So guys, the other thing is that its M-Pesa performance continues to rise, and the reintroduction of charges between buyer to seller and seller to buyer transactions has brought more money for them. The other thing is mobile data usage has increased, which obviously has implied faster growth in average revenue per user. So the company is definitely making a killing. And if you'd like to add some of these shares to your portfolio, make sure that you do. The other share is Equity Group, and the current share price is 46.1. If you have 4,610 shillings, you can buy yourself equity shares. Equity is in banking, and as we saw in the dividend shares, banking is really doing good in terms of their share price. So the key positives are it has its regional presence in 6 countries, which serves to reduce risk because they have diversified, like they're not just depending on one country to bring them revenue. So diversifying, as usual, is a strategy for investing. Even you as an investor, you should adopt diversification in your portfolio because you're trying to minimize risk. So the other thing is it has a robust contribution of subsidiaries to pre-tax earnings. So the pre-tax earnings are more and they get subsidiaries. So when they get subsidiaries, it's like their tax gets reduced. So the other thing is well-diversified loan book whose growth in the medium term has been driven to the merger between DRC and Kenya. The Equity Group did a merger between DRC Bank and Equity. So they formed a bank called Equity BCDC. Yeah, so the merger has obviously allowed them growth. A merger is just two companies joining or two companies, one acquiring the other, and they become a merger, they merge. So the other thing is strong asset quality, as they have fewer non-repaid loans. So obviously if a bank has less loans that are non-repaid, it means they have recovered most of their loans, and they have recovered most of their loans, and obviously the interest rates have been recovered too, which drives growth. So the other one is growth is expected to be anchored by net foreign exchange income and fees and commissions. So the transactions between international transfers and even national transfers has brought more money for them. And yeah, that's because most people trade using equity. It's quite a common bank in Kenya, and it's also common in other countries. And they have also they introduced the SIM card. So imagine having an Equitel SIM card. It's like they have their own network, so they're obviously earning some money from the transactions going on. So the other capital gain share is KCB Bank. And like I've said, banking really does good in terms of their shares, because they're just a big deal. Banking is business, so they're also in business, and yeah, that's why they're doing good. So KCB has a high adoption of alternative banking channels, especially digital channels. Like most banks have adopted the transaction channels, online, international transfers and transactions. So that obviously drives growth. They're the largest recipient of Kenyan government funds, so they're a strong bank. They're not likely to collapse. They have their regional presence in 6 countries, so it's the same as Equity. They have diversified, so they're not depending on the revenue from one country. The other one is future growth in the short term to medium term is expected to be driven by bank acquisition, improving synergy from Rwandan bank, like this, the same thing that Equity did to acquire a bank in DRC to form a merger is the same thing that KCB has done in Rwanda. They have acquired a bank and formed a merger, and obviously if they combine, they bring more growth because there's more synergy, you understand. The KCB group has undertaken various initiatives to improve asset quality, and this has ensured that the non-paid loans are decreased. So obviously, as we saw, if the non-paid loans are decreased, it means they recovered most of their money, and they recovered also interest and profits, so they're not going on a loss. The other capital gain share is East African Breweries Limited, EABL, which is the highest share because it costs 177.5 shillings. So if you have 17,750, you can buy shares of EABL, and then when it goes to like 200, you sell, you gain some money. That's how you do it. So the key positives is the financial performance is expected to remain strong, because obviously they're a production company. They produce alcohol, beer, and all that, and obviously beer and alcohol is a big deal in Kenya, so they don't go out of sales. So robust growth is also expected from Uganda and Tanzanian subsidiaries. The thing we notice with these countries, they have expanded their wings beyond borders, like they're not depending just on the Kenyan market. They have also adopted digital distribution channels to support sales. So maybe this includes like marketing online or delivery, like you can buy when you're from anywhere. So this obviously drives sales. Guys, those are the 4 capital gain shares. Obviously do more research. You can get other shares. There's a lot of shares that are capital gains, like Bamburi Cement, all those. So make sure you do your research and keep up your journey of investing, and don't forget to like, comment, subscribe, hit the notification button, and make sure you don't miss another episode, because here we are learning. I'm dropping all the gems, and yeah, share with someone who you know is also trying to start their financial literacy journey, and I will see you next time. Bye.